Good morning, guys. It's Ian from OSBFX. It is Friday, the 7th of January 2022. It's just gone 9 o'clock in the morning in the UK. That means one thing, it's the first Friday of the month. It's non-farm payroll. So all eyes will be on this US figure release. I think it's expected to come in around about 420 odd K, a build of 420 odd K. US employment is currently near 4.2%, which is pretty low. So it's all looking pretty bullish, if you like, for US, and I have a mild bullish bias on the US dollar, but I don't think it's going to be the driving force behind currencies today. Let's get to the charts and I'll try and explain my thoughts. So here are my single currency charts. We've got the dollar, euro, sterling, CAD, or Swiss, sorry, in between, CAD, Aussie dollar, New Zealand dollar, and Japanese yen. And you can see I've highlighted some of these blue and some of these red to give me a mild bias. Now, with regards to the dollar, I'm seeing this, which is a bat formation. So that dip lower, obviously FOMC, Fed minutes pushed this higher, and then we've basically consolidated yesterday. The bias, I believe, is still to the upside, but it's not really a main play. And the reason for me why it's not a main play is because if I look at my dollar denominated currency pairs, there's no real support or resistance in any of them. So I've basically got to wait until this pattern plays out, either buying dips or selling rallies. And at the moment, it's really just in no man's land as far as I can see. But like I said, a mild bullish bias. And I think that's quite important when we get down to the Aussie dollar, because the Aussie dollar is near the completion of a pattern. What normally happens is that the Aussie will move to the upside on good news or buoyant stock markets. So I'm thinking positive non-farm payroll, positive dollar, weakening yen, and this all looks like it's lining up with regards to price action today, and potentially weaker euro. So we could see the euro move to the downside as the dollar moves higher. But like I said, it's not, for me, it's not one of the plays. So euro, the reason why I'm saying euro weaker is because I'm up towards resistance levels. You can see we just dipped lower from that resistance level yesterday. Got a second resistance level here on the single currency chart. So I believe there's the scope for buying into, selling into rallies in euro to move down in this CD leg to then complete a Gartley formation and then move higher. And in fact, if we look at this sort of chart, it's really messy price action. I mean, this could just be seen as a channel or a flag formation with an eventual bias to break to the upside. But I think for the moment, the bias is still lower. And if I reflect that back onto my currency chart, so here I've got basically different single currency crosses. So the euro, and if I go through, you can notice that the only two that have actually got an amber light with them are Euro Aussie and Euro New Zealand, because the others, if we go back to this chart, really it's only Aussie and New Zealand. I haven't got a support or resistance level on euro dollar, so but I have on euro and euro Aussie and euro New Zealand. So they become the prime pairs to play. So euro Aussie, and remember I'm expecting to sell into rallies. So here I've got two bespoke resistance levels. I like them when they're very close together because then it gives me sort of double power, if you like. I know that I'm not just hitting one resistance level, I'm potentially hitting two. So 158.87, 158.92 are my resistance levels today. And you can see here just forward projecting, so take that off. We've got our retracement levels here from this sell-off, and then we've got an extension from where I believe we're going to stall, and you can see that we get a 161.8% up near the 88.6% pullback level, and that makes a bat formation. So this then becomes prime for me. 158.87, 158.92. We'll be looking for reversal signals in there. Euro sterling, I'm just going to mention this because we did mention it to the group this morning, but only because of sterling being right at the top of a of a pattern, which I'll talk about in a minute. And this, I trade off the dotted lines, not into them the majority of the time, but this really potentially for sterling weakness is quite aggressive to the upside, but it's not a trade that I am taking. Euro New Zealand, so again selling into euro, and here I've got a nice pattern again. I've got a back formation. We did complete yesterday and we've moved to the downside, but we're now seeing that euro single currency move higher again and retesting this level. And you can see here that my resistance is at 168.01 and 168.16, and we didn't actually get to 168.01. We did complete the back, but we didn't get to my bespoke resistance level. So again, it opens it back up for me, and I'm looking at that again to push euro against the New Zealand dollar to the downside. So let's go back to single currencies. I'm quickly going to talk about sterling. This is last chance saloon for sterling, and that's why I said it's sort of last chance saloon for euro against sterling. This is a very large gapped crab formation, and we're actually pushing through the high of that at the moment. But this is the most important chart. This is a weekly chart, and this is a crab formation all the way down here. It has to hold this high, so sort of risk reward is quite phenomenal really if you want to take a short sterling trade. But at the moment I've got nothing in the baskets, really anything telling me to take a short sterling trade apart from that euro sterling. So I'm sort of not ignoring it. I've got it in the sort of back of my mind, but it's not one of my proper setups. So we've talked about euro, we've talked about the dollar, we've talked about sterling. Swiss is really in no man's land. Canadian dollar, we had just a small pullback in BC, and now I'm looking at selling into rallies as far as the Canadian dollar is concerned. So I reflect that back again onto my cross currencies. Aussie CAD looks very weak. So remember I said I've got a bullish bias or mild bullish bias on the dollar, but not really my play. But what I do have is the fact I want to sell into the Canadian dollar, so I want to buy into US dollar against the Canadian dollar, and I've actually got 4 support levels here, so it's going to be pretty tricky to try and pick the correct one. They actually extend from 126.94 to 126.65, so I'm looking to that area to get long. I'm going to keep an eye on that Canadian single currency because that has to hit its resistance before I'll even contemplate taking a long in this currency cross. And then I'm looking for this for the back formation. So again, using bespoke support and resistance levels to form a pattern. And I've just put this one on here because this is the New Zealand dollar against the Canadian dollar. And the red lines aren't bespoke support and resistance, they're just confluence areas. But if you look here, we've completed a back formation on the 4-hour chart. And if we go to this, that back formation then makes a back formation, a bullish back formation on the 8-hour chart. But like I said, I'm not taking it only because it's not my bespoke support and resistance levels. Aussie dollar getting close to completing a back formation again, so that's offering a bullish bias in the Aussie. So I go back to my Aussie crosses, and here I've just got Euro Aussie and Aussie Yen. Euro Aussie, you can see the dotted lines up here. Let's go to another time frame. So Euro Aussie looking to sell just above the 50% level, again making a back formation coming down in the BC leg. The resistance zone is 159, 158.92, 158.87. Of course, we've already covered this because we covered the euro. Okay, what we haven't covered, is snowing outside, is Aussie Yen. I have a tendency to digress a little bit. And Aussie Yen, again, I've got double support here, 82.38, 82.35. Aussie has to hit support before I would contemplate taking this long trade to the upside. But the risk reward could be phenomenal. because I've got two patterns here. Got a potential I've got a potential butterfly here, got a potential crab formation there. So again, sometimes the BC legs are 38.2% of the AB leg, sometimes they're 88.6% of the BC leg, and this would be a 38.2%. So it's you need a decent reversal candle there, because you're not placing your stop under here, you're placing it under your reversal candle, which makes it a little bit more tricky to trade. And then lastly, New Zealand dollar. And the reason that I'm highlighting New Zealand dollar is just purely because I've got this 261.8% fib here, and we've already covered New Zealand dollar anyway, because the only currency cross that plays out for New Zealand dollar, and this is selling euro, buying New Zealand dollar, remember, and we're already done, we're already in on the euro side of that cross currency. And again, I need to see it up here to be able to sell into it. Okay, guys, so non-farm payroll, slightly bullish bias as far as Aussie's concerned, the dollar's concerned, but I don't think that I don't think the dollar's the single currency to play. I think it's going to be the crosses, and the crosses are, or the single currency crosses are Euro, CAD, Aussie, and New Zealand. Okay, guys, I won't be back again today because obviously I'll be a little bit busy this afternoon. Have a great weekend. If I see anything that's of interest, I will post it over the weekend. If not, have a fantastic time, and I'll be back again on Monday. Many thanks.